Stuart. Welcome to WorkSmart. How's it going?
It's going good, actually.
For a couple months now, we've been discussing the effects of the pandemic on the real estate market in general. We've highlighted specifics about New York City's economy, covering different types of investors, owners, and their overall differences in their amount of debt, the offsetting revenues, and the valuations of their properties decreasing significantly. We have been talking about this information from 30,000 feet. Stuart, can you share an example of how you've been helping clients navigate this unprecedented time?
Yes, it's kind of interesting. Actually, like a couple of months ago, it was a normal, like, somebody called me up, an accountant called me up that I do business with and said, I have a client that needs help. Okay, great. What's the story? Well, he's got a great building in the city.
Right.
Seemed like it was worth a lot of money. Has rents coming in, and there's a problem because the term sheet he was given for the bank for a new loan, and there's a high probability that the bank is not going to renew his loan. We've got to do an analysis and find out what's going on here, right? So I talked to the gentleman, looked at the property, looked great, and they were getting about $400,000 a year for the upstairs, and which was about 8 rental units. And downstairs, they were getting about $300,000 a year, and they had operating expenses of about $350,000. So in my mind, $350,000 net operating income is probably a $7 million building. And he only wanted to borrow about, I don't know, $3 million, which is, what is that? It's like 45% LTV. No big deal.
Yeah.
Doesn't sound like a problem. So as we started to talk more and more, and they started getting the information, I started getting copies of the lease, I realized that the guy that was downstairs was doing great and paying the $30,000 a month, only to find out that as we hit the pandemic, he came back to the owner and said, I'm in the retail business, I can't continue to pay $30,000 a month.
Right.
It's a pandemic, people aren't even coming to the store. You got to make a deal with me.
The pandemic's made a significant impact on retail and overall.
Huge,
yeah.
Huge. And what's happened from the landlord standpoint is, sure, you can evict the people, right? But then who are you going to get in? And in this economy and everything else, the guy that you would bring in smells the blood and is going to want the property for hardly anything.
Yeah.
And so you're not going to be in a better spot anyway by just going to another guy.
Right.
So they made a deal for about half the rent, which the landlord agreed to. And then as the payments were coming in, the payments weren't coming in exactly as planned.
And that is huge for banks. They need to see consistency for financing.
What the bank really wants to see, and this is where the problem comes, I've never seen it, I've been doing this for 12 years, I've never seen this before. The bank goes, sounds like a great deal. I looked at the buildings, great. The location's great. They're getting all that money on the rents upstairs. But Stuart, do me a favor. Send me from January to November because that's when we started, from January to November of 2020, send me copies of the depository account where they're putting the checks for the rent.
Right.
And send me copies of all the leases so I can see that it matches. Well, here we go. The rent is not going to match the lease, and the rents and the deposits are not going to even match what they agreed to going forward. And on top of all that, at the lower number, what they call debt service coverage ratio, the building's not going, even though it was worth at least $7 million, probably may not be worth $3 million based on cash flow.
Right.
Not because it's not sale, based on cash flow. And therefore, the bank cannot give them the $3 million that they need.
And I know you mentioned like banks are really stepping up and asking for material, like additional information they've never asked for before.
Right. They never asked for checks.
That's
This
it.
is like proof of that they're actually getting, which is like, who would have believed? But this is like part of the storyline was we've been working together on videos and everything's been going with the pandemic. It's a shame because people have worked hard their whole life, never expected something like this. And actually, this guy's in a better shape because he actually has the money to pay the rent himself personally.
Sure.
So he's in great shape, but yet the typical bank will not touch it.
Right.
So I went out to a number of banks, and I found a bank that would lend on a property even if there was no rent coming in. The deal would be they would give 50% LTV, which is not high. The appraisal would have to come in for at least $6 million, which is not going to be a problem here. Not based on rent, based on what the building could sell for.
Right.
And the owner in this case has the ability to make those payments even while we're going through the pandemic, because he was getting partially paid anyway.
Right.
So it wasn't that much more money. Whatever it was, he could do it. So
I imagine for him as a client, as your client, like it must be a very scary position to be in, to have a building that you think has so much value, and then to be in this situation with the financing where, because of that inconsistency, he's kind of stuck.
Right.
So, most people would have to go to maybe extremes, like have to get hard money, and you're saying, he wasn't in that position, so you were able to find this solution.
Right, and to answer your question about the hard money, that could be a potential issue also, because if the guy has access to hard money, which we have access to that, those kind of people as well, they have to. In this case, it would probably work because the guy had actually money in the bank that he could pay.
Right.
But a lot of people during the pandemic could have, a few $100,000 in the bank or $400,000 in the bank, which is enough.
Sure.
Considering what they had. But when you go to a hard money loan for 10 or 12% plus points, it would cost you maybe $400,000 a year to pay for the hard money.
Yes.
That could wipe out the guy.
Yeah.
So I think it's important to see where the strengths and weaknesses are in the building that we're talking about, the subject property, and let somebody go through it and do an analysis and figure out where can we take this person to, and have and get him the solution that he needs so that he doesn't lose his property.
I think that's what's so unique about the liquidity source versus a typical, person who's grabbing loans and, just comparing rates, is you really sit down and go into the weeds with your clients. You figure out what's the best possible course of action. It's very unique in your industry. So from my perspective, they should be reaching out to you.
I think that just having a broker go out and, in normal times and get a generic term sheet, with hopefully the best rate, and thinking that's the way that it should be done. There's so much more to it. It's understanding what the potential, because even in real life and any time, even non-pandemic, there's problems and issues and wish lists and things that people need specific for their needs.
Yes.
That may not be for everybody. So I think having somebody that can do this and do it well is really important.
Right. Someone who could be your trusted advisor.
Exactly.
I really am impressed with what you're doing for your clients, and the fact that you are able to do it for them in such an unprecedented, almost like, uncertain time. You're working through these issues with clients in real time. This is actually happening. You see it every day, articles in The Real Deal, all over the news, where hotels are, being devastated, the retail industry. So the fact that you can sit with your clients, figure out a solution for them that will work for what is happening for them is amazing. And I really want to thank you for your time. Thanks for coming.
Thank you for setting up this interview.
Thank you. Everyone, I invite you to follow the Liquidity Source on Facebook, Instagram, LinkedIn.
I look forward to talking to you.